Hey, good morning, everyone. Paul McMahon here with Forex Smart Trade. So glad you could be with us up and early this morning to take a live currency trade. Today is Tuesday, November 24th, the week of Thanksgiving. Our goal here at Forex Smart Trade is to help you become the best version of yourself. We do that by teaching you how to currency trade using our super accurate proprietary indicators and our best in the business one-on-one coaching. So with that, let us get started. First thing off, and actually I hadn't opened it up yet, is we need to do the disclosure.
Due to federal and state regulations, we are providing the following disclosure. Please stay tuned, as this will take less than a minute. Foreign exchange and futures trading are highly risky, and you can lose all the money you invest should you decide to engage in live trading. We are not responsible for your investment, trading, or tax decisions. We are not licensed financial advisors, traders, accountants, stockbrokers, or attorneys. We are not licensed commodities brokers and do not engage in or facilitate commodities transactions. We are not an introducing broker, and we make no recommendation as to where you should invest or what broker you should trade with. As you apply what you learn, we recommend you seek advice from licensed professionals. Any trade results that we show should not be considered typical of our students. We do not and cannot track the results or performance of our students' private trading accounts. We do not know what a typical or average student earns or loses trading. This is not a get-rich-quick program, guaranteed system, or business opportunity. We sell training and trading tools. We make no promises our training or tools will generate future income for students, and you may not make your investment back, including your investment in this training. Any redistribution or recording of this material is strictly prohibited without advance written permission.
All right. Let's get going. Just a few announcements. This week is Thanksgiving. Probably after today, I will not be trading. So I will not be sending out a trade tonight. I will send out my trade results, but I will not be sending out a trade for Wednesday. The rest of the week is kind of really a dead time. The indicators don't work as well when the volume is low. What else? If you took the trade from last night, it was a pending trade. It was a sell stop. The stop was set that it was sitting on a support line. It didn't break the support line. You can go ahead and close that trade as the euro dollar ended up going up. So just go ahead and close that trade, and we'll see if we can find a new trade this morning. No Thursday tip-top trade this week. Because Thursday is Thanksgiving. Thursday tip-top trade is kind of a reward bonus that we give for people who have provided referrals. We appreciate referrals, and the referral is simply just to consider the light program. If you have friends or family or acquaintances, introduce them, give me their name and number. I'll follow up with them. And you will get a 3-month invite to the tip-top trade. As it is the holidays, consider giving a light training program as a gift. Typically, we get better trading by watching good traders trade. That's why you're here this morning. And then also by trading in a group, talking about it, being associated with people who are trading. It stimulates the excitement and helps learn better and faster because you're talking about something that you all have a common interest in. So it's good to form a trading group. If you can form a trading group of 5, I will come and help the session. Okay, very good. So that's that. And then, of course, as you know, we have a schedule of live trades. The yellow is for lights, the green is for members, and the purple is for members, and it's an extra paid session. Lots of training opportunities. They're run by a variety of different people, all of them good traders to be able to get on and do a live trade. They are very good, and everybody's got a slightly different style. So the more traders you see, the better you can be aligned with a trading strategy that fits the way you think. Because we've got a dozen different signals. I use one of them primarily, the 10-point trade, and that's the one we're going to use this morning because that resonates with me. But there are many different ones. So finding the one that's right and that you feel comfortable with and find success with is one of the keys here to being successful. So with that, I've got my daily trade routine. It's kind of like a pilot's checklist that I like to go down every day. First thing, I want to make sure that my chart is live. It is connected to the internet when it's green up here. And when this little box is green down here, we have, that means it's current. If I go back in time by clicking on the box here, I am looking at a historical chart. The reason I might want to look at a historical chart is I want to go back and look when I took a trade, or I want to do some back testing. That is going back and looking for signals and then seeing what happens. Very good way to kind of improve your ability to see things. At some point, the signals become, when you've used them enough, you start to be able to just look at the chart and you don't have to think. It's almost like, I don't know if any of you played sports, at some point, say you played basketball, you don't need to think about the shot. It just becomes automatic. The same kind of with trading. In the beginning, you need to think about it. You're looking at it. You're trying to decide what's going on. But as you do that more and more, it becomes instinctive. Well, let's go on. What's next on the checklist? Review of yesterday's trade. Last week we took a couple trades on Tuesday. Both closed. One was I think an 11 pip 10-point trade, which was this AUD JPY. The other was a 5 pip thick orange trade on the pound dollar. And then Wednesday we had a special trade session. I apologize, we had some glitch with the go-to meeting and a bunch of people weren't able to get in. I'm sorry about that. Maybe we'll try as a makeup. We'll do that maybe next week. We'll have a special session to make up for the special session that people couldn't get into. Doing a special session tomorrow wouldn't be worthwhile because it's the day before Thanksgiving. So with that, let us keep going forward. We are technical traders. What that means is we trade based on price action. Our indicators are very good at figuring out when the turns are in the market, currency market. Exchange rate goes up a little bit, goes down a little bit, and we are good at catching those turns. Because we are technical traders, when there's news that's going to affect a currency, we want to avoid that news. We're not good at figuring out how the news is going to impact the currency. So with that, let's open up our, we use Forex Factory. And Forex Factory gives us goes through events, news events that might impact currency. And it breaks it down into 3 categories. Yellow is low impact, orange is medium impact, and red is high impact. We want to stay away from red items. Today, Tuesday, November 24th, there are no red items until tonight with New Zealand. So with that, we've got kind of clear sailing today. There's nothing that we need to be concerned about. So now we will go into our technical analysis. So the technical analysis I'm going to use right now is one of our dozen signals. It's the 10-point signal. With the 10-point signal, I start with the middle part of the chart, which is the majors and minors. Right now, this chart that we're looking at is a composite chart. It has 6 currency pairs on it: euro dollar, pound dollar, Australian dollar, dollar Swiss franc, dollar yen, dollar Canadian dollar, and all set on a 60-minute time chart. I'm going to use the 60-minute time chart as a vehicle for determining whether I want to do more study on the trade before I take it. This gives me the initial signal that this is a trade setting up. And then if I see the trade setting up, then I'm going to look at the full chart on whatever the pair is to decide if I want to take the trade, and how many pips it's worth. So right now, I start, as I said, with the middle section. I am looking for either overbought, which means we're above the blue line, or oversold and we're being below the red line. Right now, my lines are above the blue line. I'm looking for everybody pointed down and double crossed. My minors are pointed down pretty well. My majors are pointed down, but they're kind of sideways. They're not that, the slope isn't that steep. So because the slope isn't that steep, I'm going to pass on this. So even though I kind of got all 3, I want kind of a greater slope on this. So let's go to the next one. Euro dollar. Again, looking for overbought, oversold. We are overbought, and we are just about halfway through the channel. Everybody going down. I will consider a trade. Ideally, I'd like to catch the lines up here before I take the trade. Now, one thing that I look at is the slope of the lines. And when I look at the slope of the lines, even though we're going down here, there's a little kink in the line here. Coming down, and it kinks a little bit. This kink bothers me because the kink is suggesting that the slope isn't as steep. If it was kinked and it was going down a little faster, I would like that. Because it's kinked and it's going up, I'm not as crazy about that. So I'm going to hold off a little bit. I want to see what else there is. I want to kind of look at the full landscape. If this line didn't have the kink in it, I would go on and take a look at my TNTs. Orange lines coming down, thin orange lines coming down. Thick orange line is flat, so I don't count the point for that. What I'm looking for is I'm counting how many of the lines are moving in the right direction. The 2 blue lines are going up. Blue is inversely related, so when blue goes up, that means down. So I got 3 points here. I need a minimum of 3 points here. But again, if we look at the thin orange line, see how it changed slope here, as is the green line. That slope change takes some gas off the accelerator for the move to go down. So again, I don't like that. Pressure is up, but red is on top, and the green is starting to roll. So that's good. We kind of have 7 points here, but this little bump in the line is going to hold me off for a little bit. I want to see what else is there. Australian dollar, US dollar, overbought. But take a look at the green line on the majors. It's kinked. It's going sideways. So I don't have everybody pointed down. So I'm going to pass. Dollar Swiss franc, we are overbought. Everybody's still pointing up. So I'm going to pass. Dollar yen, everybody's going up. The steepness is good on these lines. The lines are nice and close and tight. I like that. That's a positive. But we're a little bit more than halfway here. If the green line was under the halfway line, I would consider it. You know, the two orange lines here are going up. The dotted blue is coming down. So I got 3 here. I've got down pressure with green on top and green kinked. So actually, if you look at this versus, say, this guy over here with the pound dollar, notice we've got a kink here too, but the kink increased the slope. So the increase the slope, I liked. Had we caught that, what is this worth? About 5 pips? No, 13 pips. Had we caught that when we saw that kink? So now that we're halfway into it, or more than halfway into it, and I'm judging the halfway by the green line, I'm going to hold off and again see what else there is before I decide on taking a trade. But this setup is a good setup if these lines were a little further down. Dollar Canadian dollar, we are overbought and still going up. So nothing on these first 6. Here is a second set of 6. These are mostly non-US pairs. So let's take a look. Euro pound, pointed down, but I don't have good slope. This guy is kind of bouncing around and sideways, so I don't like that. Australian dollar, yen, overbought but going up, so that's no good. Australia, euro, Canadian dollar, minors are going sideways. Majors are going up, overbought and going up. We've got the duck bill here. See, here's his eye over here, and here's his bill. That generally means we're going to get more of an up movement. But I don't like to take buys when we're overbought, because when we're overbought, I don't know how much more is in the move. And especially on a currency pair that I'm not familiar with trading. On the dollar, sometimes if I see this, I might take a buy, depending on other things. But on a pair that I don't know, I don't want to take a buy when I'm sitting here. I want to take trades that have a high percentage of winning. And the more things that are lined up, the higher the percent of winning. I don't want to take trades for the sake of taking trades. I only need 3 or 4 good trades a day to have a good day. And if you see, you know, I probably average around 6, 7, 8 trades a day. And my accuracy rate is a little over 80%. Australian, New Zealand dollar, overbought. Minors are going down. Majors are kind of sideways. Again, I don't like the steepness of the lines, so I am going to pass. New Zealand, US dollar, overbought, coming down. The minors have nice steepness on them. The majors, I've got the kink in the line here. So this kink is a problem, and it's starting to go sideways. So I am going to again, hold off. I don't like this. Euro AUD. We are more than that. We're in the middle of the channel, more than halfway. Plus the major, the green line on the majors is kind of going sideways. So nothing there. So let's go to the last 6. Today hasn't been a good morning. We're overbought going up on the Australian Canadian dollar, Swiss franc, yen. Oversold. Everybody's going up. Good steepness. Double cross. So I've got 3 points here. I like these 3 points. I've got the 2 orange lines on the TNT. So the next thing is I'm going to look to the TNT and see how many lines agree with what I'm seeing here. The more lines that are in favor, because we've got 3 different indicators, and I want all 3 telling me it's a good trade. When all 3 tell me it's a good trade, that's my highest percentage of winning. Actually, we've got the thick orange going up. The thin orange is sideways. That's not up. So I'm not taking a point for him. Dotted blue coming down. That's a point. So I may have 2 points here. I want 3 points here. There's a little weakness here in the thin orange. If I go down to my pressure, even though I don't have all the points I need here, I've got downward pressure with red on top. I need either upward pressure or green line on top. Now, it's close to changing because we had a kind of a steep down, and you can see that steep down. We got the down candles. Then we hit the bend, little kink here. Kink in this green line is it gives us good information because all of a sudden you see the little bounce up here. So when we got the kink, the green line turned here, giving us that little up that up move. But the thin orange line, when we first looked at this, was kind of going up a little bit. Then it was going sideways. Now it's going down. We don't have enough here. Euro yen. Overbought and going up. And we get kind of a little bit of a duck bill, which suggests there's going to be more up in it. Again, I don't want to take a trade when we're overbought. Pound Australian dollar oversold. Minors are kind of going up, majors are coming down, so there's confusion there. New Zealand Swiss franc overbought. Majors are going up, minors are going down, confusion there. Canadian dollar Swiss franc. All right, everybody's coming down. Nice and steep. All the lines close together. I like this. So 3 points here. 2 orange lines are coming down. Blue is going down, which means up. Blue is going down, which means up. So I may have 2 of the 4 here. Only 2 of the 4 here. They're kind of sideways. Very light ups, but really sideways with red on top. Sideways tends to mean retracement, and we have retracement. This candle here, the red candle, is pretty much copied what happened last hour on the green candle. So we only have 2 of the 4 here. I want 4 of the 4, or excuse me, 3 of the 4. So not enough to take this trade. So this morning we looked through 18 pairs using the 10-point signal. Didn't see a single one. Now, if you notice, I'm not anticipating what's going to happen. I want to see the signal. If I see the signal, I've got the highest percentage of taking a trade. So with that, we've got about 6 minutes left. Let's see if we have a 5-point trade, a 5-point thick orange line trade. With the thick orange line, so this is another signal, different signal, so we're looking at different things. We're looking at different things. And as I said, we've got about a dozen signals. So here I am looking at, and for this I need to put my glasses on. We are looking to see if this number that's over to the left in the orange block, this number is associated with the scale on the thick orange line. The scale on the thick orange line goes from 0 when it is as high as it can go to minus 100 when it's as low as it can go. When it's at 0, that is telling me that we believe the move is maxed out. There's no more up in the move, and it's going to start to come down. Likewise, when it's at minus 100, the move is bottomed out. It's about to turn and start going up. But we don't want to trade off of one signal. I want confirmation on that. And the way I'm going to get the confirmation is I'm going to then look to my majors and minors and see where these lines are. So minus 65 isn't 0 or minus 100. It doesn't have to be exactly 0 or minus 100. It can be within 10 points of either end. So I can go from 0 to minus 10 or minus 90 to minus 100. I am here pound dollar minus 100. So that's part one of the signal. But when I look at my majors and minors, I want all four of these lines well below the red line. I want them to be down here in oversold territory. When they're in oversold territory, both signals are telling me the same thing. So I'm going to expect a little jump in the indicator. And you can see last hour, this guy was at 0. He's been at 0, minus 100. He's been at minus 100 for 2 hours. Australian USD, minus 100. So I've got it again, but my majors and minors are in the channel. They're not well below the red line. Minus 2, dollar Swiss franc. That's within 10 points of minus 100. I have all four lines here. They're above. I am interested primarily in the red and the green, the majors, the green and red being significantly over the blue line. It's good that the gray and black are touching or above, but these are the ones I'm more interested in seeing up high. So here I've got part one of the signal. I got part two of the signal. Let's go ahead and take a 5 pip sell. So we'll open it up. That was USD CHF. USD CHF. I do not have that here. So I'm going to open up the chart, file, new chart, USD CHF. I don't like this layout, so I'm going to put in one of my templates. We'll use this one. I am going to take a 5 pip sell. So new order. In terms of dollar Swiss franc, I want to, my account has $8,200 in it. So I'm going to take a lot size of 0.82. It's going to be a pending, a market order, market sell. And I am going to take it for 5 pips. So once I've taken the trade, it records it down here. I'm going to highlight it, go to modify or modify. This is good for 5 pips. Based on the accuracy of this trade, we're going to use a 4-to-1 stop loss, so it will be 200. And I just want to make sure I get my full 5 pips, so I'm at 91.27. If I go down 5, it's going to go to 91.22. 91.22. And let's go. And then the other, what some traders using this trade like to do is they like to confirm. They like to confirm the jump rather than just relying on these lines. They want to confirm that this number here jumps by more than 10 on the new candle. We've got 11 seconds left in the hour. So since we're 11 seconds left, let's see what happens. Oh, we only got a 5 pip jump. Only got a 5 pip jump. So this might take us a couple hours to close. We see the orange lines bump down. I can go back. Everybody's going up very strong. The 2 orange lines changed. The blue, which was going down, is now going up. So that tells me it's going to start coming back. But it's going to take a little bit longer. So today we only found one trade. It was a thick orange line trade for 5 pips with the USD CHF. Any questions? Let's see here. Looks like there is a question. Are you constantly looking at the 60-minute chart for a 10-point signal, or do you start analyzing again at 30 minutes past each hour? Yeah, I'm looking at the 60-minute chart, and I like to have 30 minutes into it before I start to take a trade off of it. So 30 minutes into it, the lines are well enough formed or calculated that I can rely on it. But what we didn't do, what you didn't see, is since we didn't go to the next step, I didn't look at the full chart. So I'm using the 60-minute to figure out that the trade exists. But then before I take the trade, I'm looking at the full chart. So I'm looking at all the time periods before I take it. And then I also want to figure out where my support and resistance is. On the thick orange line trade, I don't have to do that. It's just 5 pips. It's kind of irrespective of where the support and resistance are. All right, great. Thanks for joining me. Have a great Thanksgiving. I know it's kind of screwed up here that they're telling us we can't hang out with people. But be safe, and hopefully it sounds like they got a vaccine that soon this will be over. All right, thanks so much. See you next week. Bye-bye.